and China seeing the biggest gains, and the Nikkei in Japan being the biggest leader in terms of gainers regionally. When we look at the individual bourses, Hang Seng Index rising 0.9%, and the Chinese mainland markets also seeing some robust gains. As we look at what's happening on the European side of things, stocks on that particular front continuing to advance, and this is a theme that had come through from Friday following the disappointing non-farm payrolls figure, and the idea that perhaps the Fed may keep monetary policy in place for a little bit longer. Looking at those individual bourses, FTSE up 0.6%, German DAX also in positive territory, and the French CAC up 0.8%. US markets are closed for Labor Day. But to talk to us about how various themes, especially from Friday, are rolling into this week, we are joined by Gary Booysen, who is from Rand Swiss. Gary, thank you so much for your time. Let's check in on the JSE. At around 9:45, this morning, we had gained about 0.3%. How are we faring right now?
Hi. Hi, Tash. Yes, the All-Share Index is currently flat, so we've given back those 0.3, but it really is a mixed picture beneath that. So we've got the Resource Index down around 1%, and then we've got the Industrial Index up about 1%, but the Industrial is really being driven by mass and process. We had obviously we've got the US closed this evening, but we had a fairly buoyant Asian markets this morning, with Tencent up around 3.4% at their close, and that's lifted process and mass both up around 3%. On the downside, it's a story of resources. So we had a little bit of company news also around something like African Rainbow Minerals, but we've seen the likes of Anglo American Platinum down over 3%, Impala down over 3%. So it's clearly the PGM basket that's hurting the resource index today.
All right, so let's talk about those August non-farm payrolls figure. I mean, does it, disrupt the Fed's tapering plans?
I think everyone, the ball is back in the Fed's court. So obviously with such a large miss, they were expecting around 720,000 new jobs to be added. They got 335,000. So it's a big miss. And whenever you get a big miss like this, we have to see how the Fed's going to react. So, as the numbers came out, you initially saw, emerging market currencies like the Rand strengthening. You saw the Rand strengthen around 10 cents on the news. We are a little bit stronger on the local currency as well afterwards, just with the expectation that this is going to influence taper, and so that loose monetary policy from the US is going to be scaled back slightly, or at least more gradually, and that obviously making emerging market currencies like the Rand a little bit more exciting. But what we also picked up in that number is that the damage from the pandemic is certainly not over. So part of the big miss on new jobs being added to the US economy was coming from leisure and hospitality, just as the Delta variant spread across the US. Now, we also had estimates that around 400,000 of those potential jobs were being disrupted as a result of the pandemic. So it's I think we're not out of the woods yet, but it now all falls to how the Fed is going to respond. So they have indicated they were going to be fairly aggressive on the taper, but whether one data point like this can change their mind, whether the road forward is now so rocky that they will leave that loose monetary policy and those interest rates lower for longer and continue to buy the bonds, that remains to be seen. So I think the focus definitely shifted back to the Fed on the back of these numbers.
Speaking of the road forward, do you find yourself comparing the European Central Bank against the Fed when you look at their respective journeys towards tapering?
I suppose two very, very different situations. So if you look at the US, the US obviously, a much more unified country than the Eurozone, which is far more fragmented and there's far more dissenting voices. And obviously with the event of Brexit and I suppose everyone's kind of forgotten that the Grexit from years ago as well. They've got a very different path, and their ability to put through the fiscal stimulus measures that we're seeing the Biden administration putting through, I think is a lot more limited. So yes, obviously we are focusing on the ECB and what they're going to potentially do, but I think a very different situation that they're facing compared to a more unified economy like the US.
When it comes to Jerome Powell, I mean, looking at his role as Fed chair, do you find that the market actually likes the role he's played, seeing that we have been talking now about the nomination of Jerome Powell to head up the Fed again?
Yeah, so we should get that news out this week, where we've got Biden should announce a second term for Jerome Powell, and certainly if you look at just how markets have recovered from the pandemic, we've gone through one of the, I suppose, certainly the largest economic shock since the Great Depression, and markets have largely shrugged that off, and a lot of that I think is a response. At least a response to how the Federal Reserve and the monetary authorities have handled things. Obviously, with the very alternative measures that they've put in place to support the U.S. economy, that has been very, very positive for asset prices. So yes, markets are loving it, and that's why we're still seeing the U.S. stock market at all-time highs.
So locally, we are expecting GDP figures as well as business confidence index numbers. Which of the two or both do you think will be sort of the market puller that everyone's going to be focusing on?
I mean, we've got a busy week this week. As I said, there's a lot of results coming out, and both numbers are going to be important to give us a hint at what's going on in the South African economy. I think we'll see that playing out in the currency crosses, and both numbers are going to give us a sense of what's going on the ground. Just as we're seeing, we're seeing a lot of the companies reporting at the moment, very, very strong earnings, and business confidence, I think, is going to give us a good sense of how executives are feeling going forward. At the same time, the GDP is going to reflect obviously the impact of the looting and just the disruption that the pandemic has caused. So I think both numbers important. I don't think you can really afford to skip either one.
All right, Gary, thank you so much for your time. That is Gary Booysen, who is from Rand Swiss, taking us through the trading day so far and also throwing ahead to the week in terms of the events that will be unfolding. That's it for